Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Thursday, July 15, 2010. Well, the market was down most of the day, and then staged a little mini rally with just half an hour to go on a huge spike in volume, but with no news. Makes you curious, doesn't it? Could it be the infamous plunge protection team? Go Google it, see what it brings up. Formerly known as the President's Working Group on Financial Markets, it was established by Reagan after the crash of '87. Just a thought. In any event, the Dow ended up down 7, the S&P up a little over 1, and the NASDAQ down just fractionally. In essence, the markets were all flat, but they came back to even right at the end of the day. Gold was up $1.30 to $12.08, and oil was down 25 cents to $76.79. On a side note about oil, they got the cap for BP in place. Let's just hope it holds. 5-year treasuries were 1.7%, 10-year was 2.98%, and 30-year was 3.97%. So 10-year dropped back down below 3, and 30-year dropped back down below 4. Yields were down and prices were up. There was a flight to quality, if you can call it that. But the global economic news is winning out over the technicals. So today, the fundamentals beat the technicals. Even with JPMorgan blowing out estimates and being up over 50% higher than analysts expected, the market sold off. The Empire manufacturing number came out at 5, and the estimates were at 18. The previous number was over 19. The Philly Fed number also came out at 5.1, and the estimates were 10. So the business sentiment across the country is becoming very negative very fast. The real estate numbers were also horrible. It looks more and more like a double-dip recession. Even though the initial jobless claims came out at 429, better than estimates at 445, the government didn't lay off a bunch of temporary workers that it was supposed to. So all the big investors know that number is not even close to being accurate. Over in China, their growth has slowed down. It came out at 10.3% GDP growth, which sounds like a very healthy clip. However, the first quarter of the year, it was 11.9. Remember, it's about the rate of change and the direction, not the absolute number in itself. That's very important to remember. Asian markets were down across the board, and the European markets were down across the board. We barely just broke even. The only major market, if you can call it that was up across the planet was South Africa, and it was only up 0.1%. It'll be important to watch over the next couple of days whether the good earnings reports, which again in my opinion are massaged and managed, will be enough to overcome the bad economic news to give us another leg up. This has been Dan Stewart for your NORAM Asset Management Market Update.